Hello to everyone interested in the crypto world and its opportunities. This is the second episode in the series about farming on STONfai. Let's continue without lengthy introductions. In the previous episode, we left off discussing market risks and the volatility of those trading pairs that offer the opportunity to earn income from farming. Specifically, we looked at the KTON pair. To help you understand the logic behind our reasoning, I recommend watching the first episode of the series about farming. So, in addition to the features of the KTON pair discussed in the previous episode, there's another nuance to LSD competition. The emergence of other liquid staking protocols is possible. If, for example, STON appears from an alternative project with more favorable terms, some of the liquidity may move there. However, KTON currently has the support of the TON Foundation, which gives it an advantage in being the main LST liquid staking token. The impermanent loss risks for the KTON pair are significantly lower than for regular pairs, but not zero. Since KTON is roughly equal to TON, their prices move almost in sync. Impermanent loss arises because the exchange rate changes over time. That is, KTON gradually becomes more expensive relative to TON due to accumulated rewards. This means that an LP who provided liquidity in a 50-50 value split will, after some time, have slightly less KTON and more TON than initially. Because the automated market mechanism will sell some of the appreciated KTON for the relatively depreciated TON to maintain balance. In fact, impermanent loss in this case is equal to the missed profit from simply holding KTON. If the staking APR is low, for example, 5% per year, then the impermanent loss is also very small, on the order of a few tenths of a percent over several months. In addition, the pool is not symmetrical, it's 75-25. This is done specifically to minimize impermanent loss. Having a larger share in KTON reduces the need for significant rebalancing when the exchange rate changes. For comparison, if the pool were 50-50 and KTON increased in price by 5%, the LP would lose about 1% in value compared to simply holding. With a 75-25 ratio, the share of KTON is larger and impermanent loss is even smaller. Conclusion: with a steady, gradual increase in the KTON rate, impermanent losses are practically unnoticeable. The risk may arise if there is a sharp deviation in the KTON rate. For example, if due to panic, KTON temporarily drops to 0.9 TON. In that case, the LP will end up with an excess of cheap KTON and a shortage of TON itself. Classic EL? But such a deviation will quickly attract arbitrageurs to buy the cheap KTON. So, most likely, this won't last long. Possibility of profit withdrawal. There are no direct bonus tokens provided for farming KTON. Therefore, there is nothing to farm here monthly except for commissions. Commissions are accumulated within the LP token and can be claimed at any time by removing liquidity in proportion to your share. Since there aren't many trading operations, it makes sense to withdraw commissions no more than once every few months. Otherwise, you spend commissions on this, but the profit accumulated is minimal. The income from staking within KTON is also not distributed periodically. It accumulates and increases the value of KTON. If you want to regularly collect staking rewards in TON specifically, then the LP strategy is not ideal. As an alternative, you can hold KTON separately. In that case, the amount of TON you receive when you unstake increases over time. However, in the pool, your share of KTON may decrease, so you won't receive 100% of the rewards. In theory, you could exit the pool once a month, swap all your KTON for TON to receive the full staking income, and then enter again. But this would result in fees and a loss of some income due to spreads. Therefore, for conservative profit taking from KTON, it is better to do it not through the LP, but directly through the staking protocol itself. That is, simply hold KTON and periodically unstake. But if your goal is low-risk farming and, for example, monthly portfolio rebalancing, you can do the following. Keep the main amount in KTON to earn staking rewards, even if you don't cash out, and put a portion in the pool to earn fees. You can withdraw the fees monthly while letting your KTON continue to grow. The KTON pool does not have a lockup period, meaning there is no mandatory locking of LP tokens. and you can remove your liquidity at any time. When you exit, you will get back TON and KTON. The latter can be instantly converted to TON through the pool with minimal slippage, as long as the amount isn't too large, or through the KTON protocol itself. It's possible that there is also an option to unstake without a waiting period there. KTON claims there is no lockup when withdrawing TON. Overall, the classic sense of profit withdrawal, like periodic rewards, is not provided here, because KTON is a tool for long-term capital growth. On the other hand, the pool's commission income may decrease after the initial period. When everyone who wanted to has exchanged TON for KTON, activity will drop and commissions will only come from occasional arbitrage. That is, the additional APR from DEX trading will most likely be less than 1 or 2% per year in the long run. The total yield for LPs after things level out will probably be at the staking APR level minus a slight reduction due to IL. Simply put, being an LP in the KTON TON pool yields about the same as just staking TON through KTON. One advantage of being an LP is that if demand for TON increases, for example, if more people want to exit staking quickly, then commissions will temporarily spike. But we're unlikely to see returns consistently above 10% here. The stability here is much higher than in incentivized pools. Since there's no reliance on token distributions, the income is generated systematically. The risks should also decrease over time. As KTON proves itself in operation, trust will grow, the discount will shrink, and liquidity will increase. All of this reduces volatility and impermanent loss, IL. Thus, the KTON TON pool is a conservative option for the long term, but it won't deliver phenomenal short-term profits. It's suitable for investors who are confident in TON and want to slightly improve the liquidity of their staked coins. The current low APR is normal, and quite realistic it will likely remain for years. After all, it's based on real protocols, not marketing budgets. So, to sum up, the KTON TON pair offers a new way to earn from cryptocurrencies with minimal risks. Here, you can earn through farming by participating in a liquidity pool where TON coins are converted into KTON token that accumulates staking income. The advantage of this approach is that KTON can be easily used for trading or as collateral without waiting for withdrawal. The yield from this pool consists of two parts: staking rewards and a small commission from exchanges between KTON and TON. However, it's important to understand that the returns won't be high. It's only about 5 to 6% per year, and the commissions from exchanges are also small. In the long term, if you want stable income without significant risks, this is a good option, but you shouldn't expect large short-term profits. This method is ideal for those who believe in the future of the TON network and want to steadily grow their capital without taking big risks. Now let's look at the next trading pair for farming, the third in our review. The pair XAUT-USDT and XAUT-0 TON. Some people refer to it as nothing less than Tether's digital gold. Description and purpose of the tokens. XAUT is a modified Tether gold, a token from Tether that represents 1 troy ounce of gold, which is physically stored in Swiss vaults. Previously, XAUT was issued on Ethereum, Tron, and other networks. Now, XAUT-0 has been introduced. This is the omnichain version of Tether Gold on TON. Essentially, XAUT-0 equals 1 ounce of physical gold, tokenized and available 24/7. Each coin is fully backed by real gold that meets the London Good Delivery Standard. Unlike paper certificates or futures, XAUT-0 is positioned as a direct ownership right to gold, but in digital form. It can be divided into small fractions, transferred between wallets, and used in DeFi. Pairing. STONfai has added 2 main pairs for XAUT-0. XAUT-0 to USDT and XAUT-0 to TON. The first allows you to exchange the gold token for a dollar stablecoin, effectively providing access to gold and dollar trading within TON. The second pair, XAUT-0 to TON, makes it possible to exchange gold for TON coin, which is interesting for those who want to diversify their TON into gold, or vice versa, all without leaving the TON ecosystem. The appearance of Zoutzer on TON is a significant step toward bridging traditional assets and DeFi, as TON users can now hold gold and instantly sell it without banks or traditional restrictions. The gold market is usually closed on weekends, requires large amounts, and so on. Source of yield. Gold itself does not generate interest income. It is not an interest-bearing asset. Thus, the only source of APR in not-zero pools is the exchange trading fee and possible incentives from Tether or STON.fi, if any are provided. At the time of ZOT0's launch, there were no announcements of special farming programs like those for meme coins. It is likely that the team expects the asset itself to attract liquidity, so the expected yield is variable and depends on trader activity. About XAUT0 to USDT. This pair may interest investors who want to speculate on the price of gold. If the price of gold, the XAU token, changes, arbitrageurs will trade XAUT0 to USDT, maintaining its parity with the global gold price. Gold trading is traditionally not as high frequency as cryptocurrency trading. However, market events, inflation, and crises can cause spikes in volume. It is likely that the commission income here is low, perhaps just a few % per year during calm periods. In the first days after listing, while the market was establishing a fair price, volumes could have been higher, temporarily increasing the APR. But in the long term, this pair can be compared to a gold-to-dollar pool on a DEX. Commissions there are usually less than 5% per year. XAUT to TON. In this pair, the driver of trading will be the change in the ratio of the price of gold to the price of TON. Here, there are two volatile factors: the price of gold in USD and the price of TON in USD. If TON rises or falls sharply relative to the more stable gold, there will be increased interest in trading. For example, people might shift from TON to XAUT during periods of volatility, seeking a safe haven, or vice versa. This could generate more volume than in the pair with USDT, since TON itself is volatile. However, considering that XAUT is a brand new asset on TON, the volumes are still small. The TON community isn't large enough to be trading gold constantly. The JOT to TON pair is more speculative. Its APR will only be significant during periods of strong price movements. If, for example, TON falls against the USD, risk-takers might buy the now cheaper TON with gold, increasing the volumes. Technical risks. The SOT token is issued by Tether, a company known for its stablecoins. XAUT itself has existed since 2020. No serious issues have been identified with it. The risk of the XAUT0 contract on TON is small. It is likely a standard JETONT token standard in TON with a simple function for storing gold backing. But the key point is the cross-chain implementation. The term omnichain is mentioned, which is often associated with the use of protocols like Wormhole or Layer 0. It is likely that Tether used the technology that allows XAUT to be issued on TON, where XAUT on Ethereum is either locked or reserved. It should be clarified, if ZOT0 is an original issuance, then Tether could have simply increased the total supply of ZOT and registered a portion on TON, or ZOT0 is wrapped via a bridge. If it is via a bridge, then this poses a risk, as there could be an attack by malicious minters. There are still few details, however. The TON Foundation and Tether are officially cooperating. Cointelegraph has noted the expansion of XAUT on TON. It is likely that TON uses the TON Assets Hub mechanism or a similar secure bridge. About the audit. Tether contracts are usually audited, although they are simple in themselves. The factor of storing physical gold. Technically, this is a risk. If Tether goes bankrupt or decides to suspend gold withdrawals for XAUT holders, the token could lose its peg and trade at a discount if people start doubting that it can actually be exchanged for physical metal. This is already a legal counterparty risk. Tether claims that one XAUT can be redeemed for real gold, with a minimum of 50 tokens equal to 50 ounces required for direct redemption. If they fail to fulfill their obligations, trust in the token will collapse. But so far, this has not happened. STONfai smart contracts. The XAUT0 pools operate on the same engine as the others. By this point, STONfai has upgraded its contracts to V2, claiming improved speed and security. There are no particular risks in these pools specifically, aside from the general risks of DEX, such as the possibility of a flash loan attack if the oracle is faulty. But here, prices are determined by the pools themselves. Nothing stands out. Conclusion: the technical risks of XAUT0 TON are mainly related to the reliability of Tether as the issuer and the chosen cross-chain mechanism. These risks are relatively small, given Tether's reputation, but they cannot be completely disregarded. There have been cases where USDT was frozen at the request of regulators, for example, which theoretically could also affect gold under certain circumstances. Market risks. Volatility. Gold is a less volatile asset than cryptocurrencies, but its price still changes daily. Over the past year, gold's volatility has ranged from 10 to 15% annually, meaning the fluctuations are minor. For the XAUT Gold USDT pair, this means its rate mirrors the gold market. If an ounce rises from 1,900 to 2,000, the token does as well. Impermanent loss is almost non-existent here, so the provider is essentially just holding gold and dollars. The volatility is moderate. In the worst month, gold could drop by 5 to 8%. This is incomparable to crypto fluctuations. Therefore, the market risk of XAUT to USDT in terms of value change is relative. You will always have half in gold and half in USDT. It's similar to a portfolio with 50% gold and 50% cash. Of course, it can dip if gold falls, but it won't go to zero or increase tenfold. Liquidity. For now, liquidity is low tens of thousands of dollars, so spreads are wide. There isn't much trading. Prices can deviate from external ones, although arbitrageurs are surely watching. The risk is that, if you have a large position, it will be difficult to sell it without causing the price to drop. This is the risk of low liquidity. Over time, if XAUT on TON becomes more popular, liquidity will increase. Project reliability. Here, we're talking about the reliability of Tether. Tether is the largest stablecoin issuer, but in the past, there have been some questions raised about the transparency of their reserves. XAUT is a relatively small part of their business. The project has been around for more than 3 years, and there have been no issues. The gold is stored in a secure vault in Switzerland. Nevertheless, sudden regulatory bans or sanctions could have an impact. For example, if TON or specific addresses somehow come under restrictions, Tether could freeze the tokens. They have this technical capability for USDT. For SOT, it hasn't been confirmed, but it's possible. These are extreme cases. For the XAUT TON pair, additional risks come from the TON side. If TON drops significantly compared to global assets, anyone holding LP will lose in dollar value. But this risk exists for anyone holding TON. It's just that here the risk is smoothed out by half, because one half is in gold, which usually moves in the opposite direction. When crypto falls, gold can rise as a safe haven asset. Thus, the XAUT on TON pool is interesting as a balancing strategy. One half is volatile TON, the other is anti-volatile gold. The risk is if both assets go down, for example. If the crypto market crashes and gold also falls, which can happen in a global market downturn, the LP will lose on both sides. But the probability of both TON and gold dropping sharply at the same time is low, since their correlation is not high. Conclusion: the market risks of XAUT0 pools are moderate, with low liquidity, some price volatility in gold, and reliance on trust in Tether. For conservative investors, gold is a familiar safe haven asset, and on TON it is available in a new form. Impermanent loss risks. For the USD-USDT pair, impermanent loss is minimal, since USDS0 and USDT are fundamentally different gold, and the dollar-baht changes in the price of gold relative to the dollar are not abrupt. IL occurs with any movement in the price of gold. For the JO-TON pair, IL is higher here, since TON is a much more volatile asset. Here, the situation is similar to a BTC Gold or Ethereum Gold pool. When one asset rises sharply relative to the other, the LP significantly misses out. For example, if TON doubles relative to Golda, 100% increase the IL is 5.7%. That means your total portfolio grew by 82% instead of 100% because you were selling the appreciating TON for gold along the way. If TON falls by half relative to gold, the IL is the same 5.7%. You lost 45% instead of 50%. In this case, IL actually helps, since the more stable assets soften the drop. Thus, IL here is asymmetric. It reduces your gains in the event of a sharp rise in TON, but cushions your losses in the event of a sharp fall in TON. For a conservative strategy, this is actually a plus. You sacrifice part of your potential profit in exchange for reducing the risk of a drawdown. Looking at it another way, the XAUT0 TON pool is almost like a 50-50 portfolio, and IL is simply the effect of portfolio rebalancing. It's not as scary as with pairs of two highly volatile altcoins. Moreover, gold and TON can sometimes move in opposite directions. In that case, IL will be even smaller. Conclusion: IL in the Zout0 USDT pool is insignificant. In the Zout0 TON pool, it is moderate but manageable, and sometimes even beneficially smooths out volatility. The possibility of withdrawing profits. The XAUT0 pools did not have farming rewards, so there are no periodic tokens that need to be claimed. Profit is generated solely from commissions, which are automatically added to the pool. Therefore, withdrawing profits comes down to partially removing liquidity. If you want to lock in the earned commissions, for example, you can remove a small portion of LP tokens once a month, receiving back slightly more XAUT0 and USDT or TON than you originally had. The difference will be your profit. However, in practice, with small amounts, it's easier to let them accumulate and withdraw once you reach a more substantial sum. Otherwise, TON fees and slippage can eat up a significant portion if you withdraw too often. Monthly withdrawals are technically possible. There are no lockups. You can add or remove liquidity freely at any time. It all depends on whether enough commissions have accumulated. If the APR is 10% per year, then in a month you'll get less than 1%, that is, from 1,008. If that amount is significant for you and worth the transaction fees, go ahead. Another point, the XAUT0 TON pool may be more volatile, so the investor might need to rebalance. For example, if TON has risen significantly and now your position in the pool has changed in value, you can withdraw a portion, locking in profits from TON's growth, or conversely, if TON has dropped, you can add more liquidity by buying TON with gold at a lower price. This is already a portfolio management strategy. But if your goal is passive income, it's better not to try to time the market, and instead, just regularly withdraw a small percentage. In summary, withdrawing profits from these pools is flexible and unlimited. The only thing is, the profit is small without external rewards. Long-term yield sustainability. The APR of XAUT0 pools will be low, but stable. Since there are no emission rewards, there are no unrealistic figures here. Everything is based on actual trading fees. During calm periods, the income may drop to just a few percent. During periods of volatility in gold or TON, it can temporarily rise, but on average, expect single-digit numbers. This can realistically be held for years, unlike farming campaigns, which are usually short-lived. Question: will there be any activity if Zout0 does not gain traction on TON? Trading volumes could almost dry up, and in that case, the LP would basically just sit idle and approach zero. However, integration with TON has only just begun, and given the Tether brand and the interest some crypto investors have in gold, it's likely that liquidity will gradually increase. According to the news, Tether sees potential in TON. There is a large Telegram user base, so they could encourage the use of XAUT0 through marketing or collaboration with the TON Foundation. If, for example, TONcoin investment products, gold derivatives, and so on appear, this will increase demand for XAUT0 and create more opportunities for commissions. But for now, this is just speculation. At the moment, how can the stability be assessed? You will receive a small, market-level income corresponding to the available liquidity. Will the current APR be maintained? The question is, what should be considered current? Right now, it's possible that the APR shows a high number due to low liquidity. For example, A couple of large trades resulted in a 30% annual yield, but if there are none tomorrow, the average will drop. In the absence of external incentive programs, a high APR of 100% or more will not last long. Capital competition won't allow it. So if on the first day you suddenly see a 50% APR on XAUT0TON because of a single transaction, don't get your hopes up, this will be adjusted. In the long term, you can expect that the total return on XAUT0 will be similar to inflation, with a risk-free rate of 4, 2, or 5%. As for XAUT0TON, it might be slightly higher due to TON volatility, but with corresponding risks. Summary. Gold pools are the most conservative in terms of volatility, especially XAUT0, but they are also the least profitable. They can be considered more as a way to diversify assets with a small bonus, rather than as farming for profit. The current moderate APRs are real and can be maintained, but you shouldn't expect significantly more without attracting new participants. Let's sum up the pairs with the XAUT0 token from the perspective of farming. The STOT0 and STOT0TON pools on STONfai are an interesting way to diversify investments through gold, which is available in digital form on the TON platform. During short periods of high market activity, you can expect decent returns. For example, 30% annual yield on XAUT0 when liquidity is low. However, during calm periods, when trading volumes decrease, the yield will be significantly lower, possibly even down to 5% per year. In the long term, these pools will provide a stable but modest income, and they should be viewed as a way to preserve capital with a small return, rather than as an aggressive farming strategy. The risks for XAUT0 are generally moderate, but due to low liquidity, especially on XAUT0TON, there may be temporary spikes in profits or losses if TON or gold start to experience sharp fluctuations. The gold market is less volatile than cryptocurrencies. However, if both assets gold and TON start to decline simultaneously, the LP may incur losses. The advantage of XAUT0 is minimal risk and an almost complete absence of impermanent loss. Meanwhile, XAUT0TON offers greater opportunities for speculation, but with increased risk due to TON's volatility. Overall, these pools are suitable for conservative investors who are seeking stability and modest returns over the long term. This concludes our second review of the tool known as farming, along with its related nuances and new tokens. Wishing you successful investments and the growth of your financial opportunities. Use the profits you earn not just for selfish purposes. Remember that your support and attention are needed by your parents. Show them respect and care. Wishing you kindness in your soul and bright thoughts. See you soon.